Hi there folks, welcome to another clip here on my YouTube channel. Today let's speak about the NASDAQ 100 and the possible days to come, the possible moves, some facts, some fundamentals, and not to forget the chart technical part as well. Before we get started into that one, let's just have a look at that red button down here at the YouTube platform. It is very easy to click that one and be a member of this channel. On top of that, I would like to, let's say, give you some hint about leaving me some thumbs up. Very much appreciated if you do so. All right, let's start with the chart technical analysis right now. Let's have a look at the chart technical picture. As you can see, you see that NASDAQ 100 in a daily picture. And you see a couple of lines. I will just simply explain that one quite fast. That's a blue line. It's the EMA 100 exponential moving average. So that's the exponential moving average 200 with the red line here. You see attached the RSI, so the relative strength index, with that yellow line here, signal line, giving you a hint of that current Friday close with 35.82 points, so back in neutral territory. You see two areas, a red one and a green one with arrows in the same color, and that means simply a possible target to the downside for the bears with a couple of more moves down the road in the next weeks to come. And on top of that, you see that on the opposite, the green arrow, so-called move back to a more neutral territory and to rewind a couple, or let's say almost a half of the size of the whole back drop from the record high to that current correction low. So if you check out a couple of numbers, possibly interesting to see that we see a Fib retracement analysis here, a Fibonacci analysis from the last low here, 14K384 up to the record high at 16764, and you see that back down the correction to 13,72485. So to check out current numbers, just to compare them with a COVID crash, we see a COVID crash from the Feb 20, so the February 20 to the March 20 area, from 9,736.57 to 6,771.91. So that time, where during that COVID crash, the NASDAQ 100 just dipped down 2,964 points on approximately. So this kind of a move in percentage points was a drop of almost 30.5%. So that was a huge drop, a crash, an absolutely crash. If you have a look at this current market move down here, so this November 21 to January 22 dip is a move from 16,764.86 to 13,724.85. So that's a total number, or a drop of 3,040 points or one. If you just check that out in numbers and percentage points, you see a drop of more than 18%. So if you just put that into that COVID-19 crash, we should have something like a drop of more than 5K points to get that 30.5% drop we saw in February 21 and March 21. February 20 to March 20. So just to compare that kind of move we saw there. So the first one, the Feb 20, March 20, was definitely a crash. And right now we are still a couple of percentage points, so 2% of a crash scenario away. Right now it's still a correction, but you know it yourselves, 2% for the NASDAQ 100 is absolutely nothing. So needless to say, I put some facts into the fundamentals. You saw that, you will see and will maybe realize that we have a little bit of trouble ahead. Not only with interest rate cycle going up the road and China COVID-19 zero strategy and soft landing on top. So we see a couple of problems for the technology sector to come, and the whole growth sector might be getting in trouble if you compare directly with the value sector. Okay, If you just check out these green area here, this green area here, it's just marked between the 261.8 FIB retracements. So that area could be a target for the bulls at 15.294 to 15.603. So that's the reason I just put in that kind of a area here. And on top of that, it's at the EMA 100 right here. To the downside, I just put that one at the 1618 projection, so a FIB projection. I just put that one here, just because of the reason that we could see a little bit of a dip more down the road into that one. That would lead us to the conclusion that we see a relative strength index dipping in direction of 20s to 23, and giving us a chance to have something like a re-entry on the long side down here. Right now it looks a little bit more like the first day in February, and of course the last day of January and before that move. So that ultimo move in the last days of a month, where a couple of shorties, of course, like to buy back into their shares they shorted and just to bring up the market. So it smells a little bit like a bear rally here, bear market rally. Always on top of that, it's no advice. It's nothing like Merlin's glass ball. It's nothing like giving you advice to buy and sell right now directly. It's just a heads up. Okay, let's get to the fundamentals right now. All right, folks. After that kind of chart analysis, I simply want to draw your attention on some facts from the NASDAQ. As you probably already know, the first three big positions in the NASDAQ are already around 29% of the whole index weighting. So that's Apple on position number 1, Microsoft on position number 2, and Amazon.com on position number 3. And if you simply add all these kind of companies like Meta platforms, so also known as Facebook, Instagram, WhatsApp, Tesla, Nvidia, not to forget the Google empire, the mother holdings, so Alphabet A-class and C-class shares in there, and PepsiCo, Nvidia, and Adobe, all these kind of positions from 1 to 10, adding to an index rating above 50%, way above 50%. So in case of these big fat companies are moving neither the way up or down the road, they are moving the whole index, of course, because of their huge weighting and because of their points. And we saw that happening in the last days, and especially the last 2 weeks, when the NASDAQ100 started tanking, and you saw a couple of these big fat companies like Amazon and like Alphabet and others tanking as well, with huge numbers, bigger numbers. As well, like Netflix with a loss, one day loss above 20%. So crazy moves. And in case you might scratch your head and ask yourself what the heck is going on, why is it so huge drop there and here? I mean, it makes sense somehow, not only from the chart technical stuff, but not only from the kind of interest rate debate. It's everything mixed together, but on top of that, it makes sense if you just have a look at the current situation in China. All these kind of big companies from the NASDAQ100 especially are reliant on producing stuff in China or getting materials and other deliveries from China. Producing materials, commodities, whatever. They all are reliant on China, especially or extremely reliant. And in that case, check out what is going on in China right now. And on top of that, check out what is going in Asia, a very important region for the world economy, regarding freight rates, shipping rates. So all these kind of issues are not only starting again, they just keep up being in a high danger zone. So the cost of freight is very, very high, still very high. There is nothing like a situation to be comfy with. So in case you might check out this kind of shipping rates, that freight rates, you will see that they are going up again. And not only because of the reason that all this stuff needs to be brought to Europe and to the US. No, it's a special case again in China, and it has to do with the zero COVID strategy. It has to do with the Olympics because they try to send out the picture of a China who is able to manage that zero COVID strategy. And that is very important. To send out a picture of strength out to the world. Yes, China can do it. We will manage that kind of situation. And right now, they are blocking everything. This kind of a zero COVID strategy is sometimes even blocking a whole harbor or a whole city just because 1 or 3 or 5 cases. Imagine that could happen to Europe or whatever. So this could happen, and it already happened, that they simply block a whole city with millions of inhabitants just because of a couple of COVID cases. And this has big effects on producing, on materials and all the stuff around that kind of topics with technical companies and with NASDAQ 100 companies as well, and the whole market. So this is one thing you should always think about. And you see that as the current situation is just China is trying to manage that soft landing with the People's Bank of China lowering rates. And the US is about to hike rates. So the Fed is about in that cycle starting of hiking rates this year. A couple of other central banks as well. So this is something like a mix for with central banks sending out a signal. It's not to be in a favorable position to be in tech stocks, so-called growth stocks. Probably you should better get into, let's say, more value. But it's just my opinion. It's nothing like Merlin's glass ball or advice you should do so. It's just a thought, just my thought. All right. Needless to say, one topic, I absolutely skipped one topic. That's the topic Russia, Ukraine, NATO, US. So all this kind of trouble, geopolitical trouble. I simply skipped that one because one day it is something like very negative for the markets. And another day it's positive for the markets when it comes to a special motto at the stock markets like when cannons roar, then you should buy, blah, blah, blah. So this is the case, and this is the reason why I simply skipped that kind of topic from Russia, Ukraine. Of course, a very frightening story and frightening development there, but try to stay in that kind of technicals and fundamentals with the world economy, especially with the second biggest economy, and that's China. All right. I wish you a perfect start into the new trading week. Lots of good trades, not only lots, a load of good trades. And of course, not to forget, be 100% healthy and happy. And see you next time. Thank you very much for your attention and your time. See you.